credit. We're going to talk about credit and assets first. With credit, I mean, you hear a lot of people, what's my credit score? You can go to the websites. What reports do you guys actually pull, and what bureaus are you looking at for credit scores?
Yeah, great question. So every mortgage lender is required to pull all 3 credit bureaus.
Okay.
So we all know about Equifax with the exciting breach that happened.
Yep, there we go.
So there's Equifax, Experian, and TransUnion. Every lender has to pull all 3 for mortgages. So, and you can think of it as every time you purchase any kind of a debt or you apply for any kind of a debt or liability, they're looking at the likelihood of you paying back that money for each given transaction. So there are different reports for everything. So if you go and you buy a car, they're rating what is the score, the likelihood of you paying that car back, right? And it's going to be a different likelihood for an auto loan versus a mortgage. So there's a mortgage, because of that, there's what's called a merged residential mortgage report. And it's a different report, so you get a different score with a mortgage than you would with an auto loan.
Okay, so I can't go down to Ford and look at trucks and have them pull my credit to qualify for that loan, and that's not going to carry over to you guys.
Same ballpark, it's just not...
But it's not going to be the actual numbers. So if you hear, that's the report, don't go running around saying I have a 805 credit score just because Ford Motor told you so.
You can do it, make yourself feel good on Facebook. But yeah.
Okay.
A really common question I get is Credit Karma. I personally use Credit Karma. It's a great tool. It's free. It's awesome. You guys go do it if you don't have it or don't know about it. But Credit Karma, Equifax, Capital One, all your banks, they all use credit monitoring services that guesstimate what your credit score is based off of a consumer level report.
Okay.
So it basically kind of does a ballpark number based off of everything, and we all know that if you try to be everything, then you pretty much just suck at everything, right?
Yep.
So so from that, it's a good guesstimate. It's a great tool to monitor your credit and activity, but it doesn't tell you accurately what your score is.
Okay. So with that accuracy, what are the thresholds? Let's kind of run through some of those, because I know, your VA qualifications, your FHA, and your conventional loans, we'll talk about those here in a little bit as well. But each one's going to have a different threshold for what credit score they will allow as like a minimum credit score. So let's start there and work forward. So
yeah, and there's kind of 2 conversations, 3 actually. So there's the ideal credit score, which is where I feel it makes sense, and that's where having a mortgage advisor or someone that knows what they're doing to say, okay, based off your specific goals and what you're doing, this would be the best score, right? So there's the ideal score for a given program, and then there's a minimum score. So just because it gets you in the game, that doesn't mean it's best for you. It gets you in the game, right?
True.
And there's an exception, kind of a gray area, exception basis. So the minimum on paper is 600 for most loan programs, 600 plus. So most government loans, VA, FHA, are 600 plus, whereas conventional is technically a 620 plus, so 620 score or higher.
Okay.
So these are just minimums that we're talking about, right? Minimum
Absolutely,
scores.
just minimums.
Okay, cool. What if I have a 500 credit score? I'm never going to get in a house, right?
Yeah, that was going to be my next question. Okay, I was, college, I racked up credit card debt, and I was late on a couple bills, and my credit score is down in the 500s. Yeah, I can't get into a home. What steps can somebody take right now to be proactive and start that process to start rebuilding credit?
Yeah. So this is where I think everybody's going to want me to tell them like the magic
bullet. What is it?
To fix it. Like, go to this website, go to Credit Karma and fill it, or open up this credit card. There's really no easy answer to that.
Okay.
What I recommend, and by the way, I'm not affiliated with any kind of credit repair company. I get no kind of kickback or anything like that. I refer people to them because that's what they do all day. I do loans all day.
Yeah.
I know how to do loans really well. You do real estate really well.
Yeah.
People that work on computers all day, I never want their job. They work on computers. So people that repair credit that we refer them to, that's what they do. They know specifically. They take the guessing work out. I would say if you had credit challenges in the past, do not try to do it on your own. I promise you, 9 times out of 10, you will do more harm than good. I know us millennials think that DIY, we can do it better than anyone else through Google. It's a magical thing.
I saw it on Pinterest.
How to fix your credit, 2 days.
I clicked that Facebook ad.
Yeah. So paying off collections, I'm not saying don't pay your bills, but paying off collections that pop up, if you don't do it the right way, it can hurt your credit. If you think you're doing the right thing, it can hurt it. Paying down credit cards, sometimes you might not be using best use of your money. So I look at it as case by case. The reason why we offer a free credit analysis, even if you have a 400 credit score, is I'd rather take 15, 20 minutes of my time to coach you on how to get in the right track and which direction to go than you blindly going out and do it on your own.
Absolutely.
So that's what I would recommend. If you're at a 580, if you're within a few points, a lot of the times we can rescore your credit to get it higher, or we can actually get an exception on a case-by-case basis within about 10 or 20 points from the minimum number to get you in the game.
Okay, yeah. So, I'm starting this process. I'm going to go to a lender, and they're going to pull my credit. So that's kind of that first pillar that we talked about. But, I'm worried because if I get my credit score pulled, it's gonna dock my credit. I'm going to lose 20 credit points. Is that right?
It's actually 55.
Yeah, it's 55.
Probably the most common objection that I get when we're starting the process. So it basically the stronger your credit is, the less it affects your score, and the quicker it rebounds. The lower your score is, the more it's going to affect your credit.
Okay, and give us a ballpark. What is that?
Yeah.
Worst case scenario, best case scenario. What 1, 25? What kind of?
I'd say worst case scenario. If you have a 500 credit score, which remember is going to be the biggest hit.
Yeah.
You're talking maybe 5 points.
Okay. So
if you have a 750 credit score, you're talking 1 to 2 points.
Okay.
And it'll rebound back within the next 3 months, and it'll be pretty much go away. So
it's a non-issue.
It's a non-issue. People make it out to be a big deal. Now, that doesn't mean go and apply for 10 different credit cards and a bunch of different car loans and 10 different mortgage companies. It's going to hurt your score. But we're going to do it strategically to give you, get you on track. If you do it the right way, you shouldn't need to go out and have your credit pulled that many times.
Okay, so yeah, it's not gonna be the death blow. You're not gonna see a huge drop in credit in your credit score. So let's talk a little bit. We talked about credit, kind of those minimums of really 600, 650. Really kind of sounds like more of that safe zone for where you would like to be at, ideally, to purchase a home. Is that kind of where you?
Yeah. If I can get my buyers up to 680, then they're in very, very good shape. Top tier is 760 plus 760. But again, if you're over 600 or you're close, you're in the game, we can get you a loan. Now it's just a matter of how much time do we have, how early can we have a conversation so I can coach you on the next steps to get that up as high as possible.
Absolutely.